Taxes, they're back and they're due a week from today.
Get on it, people. Ronson, Shamoun of RJS Law and USC Law School professor is here with some timely advice. Okay, Ronson, good morning.
Good
Tax
morning.
time is here.
Ronson, I'm always confused this time of the year. You come back every single year, you tell us how to do our taxes, and every year I'm like, okay, I got all these questions again. So let's start with changes, okay? So every year things change. You say take advantage of prior year federal tax changes. What does that mean?
Well, they passed the Protect Americans from Tax Hikes Act in 2015. It's called PATH, an acronym for it. And basically what it did was it extended a lot of tax incentives that we had prior for businesses, basically bonus depreciation, Section 179, a lot of incentives for individuals to invest in their business, to make it grow, and pretty much allow you bigger deductions so that you pay less taxes and invest in your business.
Contributing to your retirement account, what's the deadline for that, and how do people become aware of this? A lot of folks maybe don't understand.
A lot of people think it's December 31st, the year end, but it's April. It's the tax filing day, which is April 18th this year, or in some pension plans for employees, it's all the way in October. But for most circumstances, for most individuals, it's right before you file your returns. You could get the deduction for this year, for last year's taxes, basically for this year.
One of these years, all of us will get our taxes done correctly. You pay them and you won't get a letter from the IRS telling them you owe them more money.
Right.
What are the big mistakes that you think people make that, you know, you're a professional, you know all this stuff, and you're like, oh, it was just so silly. Don't make that mistake.
Well, most people, what they do is, you know, when it comes time to tax season or tax filing, they just do it really fast. They don't spend the time looking at their return. You know, double checking the Social Security numbers, making sure that the income figure is correct, the expenses. Most people just give it to their accountant, get it, and sign it. If you spend a few minutes just looking at it, really absorbing it, seeing what your basis is, seeing how much you made, and spending that time, you'll minimize audit risk, but you'll see so many things that were missed out by your accountant that will minimize your taxes. Just need to spend a little more time reviewing them.
Okay, so you say pay what you can. So how much are you actually required? You're saying you don't have to pay the whole thing?
No, well, you have to pay 90% of it if you don't want a failure to pay penalty. So 90% of the taxes that are owed for the prior year are due when you file, or at least close to it. So you want to estimate what you owe, and then if you file in October, then you'll have to make up the difference. If you can't afford it, it's not that. It's a 5% penalty per month if you can't fully pay your taxes.
They've made it a lot easier. You do that e-filing. Is that still the best option to file your taxes?
Yes, I would highly recommend e-filing. It's safer, it's faster, you get your refund quicker, that you get a confirmation that it was prepared. It's the best way to do it than to manually file it.
Is there free filing options available? And in terms of, is there an amount, also like a cutoff to get those filing options and done for free and that kind of thing?
Yes, so the IRS has an e-file system where it's free, but the threshold is $64,000 is your total income for the couple.
I have these boxes, Ronson. I just moved and they're like stacking up and there's so much paperwork and tax documents, and I wondered, is it time to shred these and get rid of them? How long, especially nowadays that you could like scan stuff, do you even keep your documents anymore?
The standard rule is 6 years, 6 tax years. You always hear most people say 3 years, because that's if you get audited, they only go back 3 years. But if they suspect fraud, they could go back up to 6 tax years.
Okay.
So I would keep your records at least 7 years from now or 6 tax years, just to be safe. We don't want the IRS coming and auditing you.
Are your taxes done, Ronson?
They are not done.
What?
They are not
I filed mine in October. I spend the time, I go through the documents.
Oh, see, he does that, yeah.
Oh, he does.
He's smart. He knows what he's doing.
Well, he's a lawyer. This is his job.
I used to try to do it on my own, and then I started paying people to do the taxes because it's just, you know, it worked out better.
Yeah.
But then, boy, I hate paying that fee every single year.
Oh, it's worth it. That's my number one advice. Get a preparer to do your returns.
Really?
It's well worth it.
Well worth it.
It is indeed.
All right, Ronson. Always good to see you. Thank you for being here.
Great to see you guys as well. Thank you.